Guys, how we doing? I am not rough today. Lee and I had a good night last night and he's away to the toilet. But we only had a couple of drinks. We did not get smashed because we have a big, week ahead with everyone else arriving. Roger Banks and all that are all coming next week. It's going to be pretty wild. So, yeah, we didn't have a wild night. We just went out and kind of showed Lee about the town. Had a couple of Negronis, a couple of stogies, and some nice food. So, as always, work never stops, right? So I'm going to cover the fundamental analysis for you this week, okay? So, excuse me, jumping straight in. We always look at last week first, right? So let's look at last week. China, Aussie dollar, and NZD. If you're new to this, we always do these three pairs together because they're very closely correlated, okay? Let's have a look. CB leading index month on month is up slightly. Aussie CPI year on year it's down, but it is down from previous, but it's slightly higher than forecast. Okay, which it's kind of stable, right? Because they already forecasted, which means they already expected it to be much lower, but it's still a little bit better than they expected, so it's still decent news. Construction work done quarter on quarter is actually up. It's just less than expected, so that's why it's shown as red, but it is actually up. Previously it was at -2, now it's at 0.1, so that's growth, right? ANZ Business Conference 50.6. Private capital expenditure quarter on quarter is down. Building consents is up, NZD. Retail sales month on month is down in Oz. Private sector credit is down slightly, but it's as anticipated, so it doesn't have much effect on the market. Kind of priced in, they already expected it, right? China manufacturing PMI 49.1. That's not good. That's bearish. They're not strong. China non-manufacturing PMI 50.3, which is up, which is strange because China is a manufacturing country, right? It's their bread and butter. So yeah, overall, let me just get my notepad out because we need to write strong, weak, and neutral, right? Don't forget that. Strong, weak, and neutral. Now, for anyone that's new and you're thinking to yourself, why would you do that? Why wouldn't you do strong, neutral, and weak? Because that makes sense, right? Going down the way. We do that because, drop my bloody pen. At the end of it, what you do is any currency or economy that's in neutral, you don't bother with it. And you connect up a strong currency, i.e. strong economy, with a weak economy, right? A strong currency with a weak currency. And you trade that. And that's when you get the trends, going in your favor, right? When you trade strong against weak. Can you trade strong with a neutral with a weak? Yes, you absolutely can. There's nothing wrong with doing it. It's just a personal preference. I prefer to only choose strong against weak, and that's it. It's just personal choice, guys. But you can do it. You will find though, if you do like weak against neutral, you kind of get boring moves like ranges, and it's just like, well, what's the point? It gets a little bit annoying. That's why I don't bother doing it. Sorry, just topping up my tea here. And we will crack on. So let's see what we've got coming up next week for Aussie, New Zealand, and China. We've got building approvals, company operating profits, kicks in manufacturing. That's quite important for China. Commodity prices, overseas trade index, GDP quarter on quarter, kicks and services PMI. We've got a couple of things that are important. It's not a major week next week, but we've got a couple of things that are important. So for me, strong AUD, weak NZD, still weak. Now you're seeing a couple of numbers here which are coming in fairly a little bit more positive for the NZD. Doesn't mean it's strong, but you may see this little kind of intraday. Oh, NZD's got a bit of strength today. It's just these little movements, but it doesn't mean that NZD is strong, right? Because the economy overall, it's not strong, all right, when you take everything into account. So let's move on. Now, what I do is I do one pair each time. I only do those three pairs together because they're all closely correlated, right? Again, if you're new, write this down. if China is strong, all the numbers are coming in strong, it gives strength to the Aussie dollar because they'll be ordering more products, there'll be more money from China getting pumped into Australia, and it expands everything, right? Increases everything. So that's good for the Aussie economy, which is good for the Aussie dollar, right? So if China's, all the numbers are strong, Aussie dollar is strong. If China is weak, Aussie will become weak, right? If USD is strong, Aussie will become weak. If USD is weak, Aussie will become strong. Okay, that's quite important to remember that as well because it will help you further on down the line. What are we looking at here? Let me just apply the filter. Now we're going to cover CAD. CAD, you know, the economy's terrible, right? Last week, GDP month on month, yeah, it's down again. Not much news last week. Let's see what we've got. Coming up this week, we've got the Bank of Canada rate statement. So let's see if they're going to cut rates, okay? They did cut rates last time. Numbers haven't been so good. If we go, let's just go back 2 weeks because there wasn't much news last week. So let's go back 2 weeks. CPI down, trim CPI down, common CPI down, core CPI month on month up slightly. It's month on month. The year on year, so the important ones. Core retail sales month on month down, up slightly. Sorry, retail sales month on month still -3. Corporate profits 1.5. So it's still pretty shit. It's still weak for me. Canadian dollar is still 1,000,000% weak. All right. Just remember again, the Canadian dollar is very closely pegged to oil. So when oil is doing well, the Canadian dollar can kind of get this false strength, right? Just bear that in mind. Next week we do. Why does it say this week? Oh yeah, well it is this week. I think because it's Sunday, right? So yeah, this week coming up, we do have some good. Well, we have important data that we want to see. We want to see employment change. We want to see unemployment rate, and Bank of Canada rate statement, and overnight rate. We want to see if they're going to cut rates, right? Manufacturing PMI. We also want to see that. It's not terribly important because Canada is not really a manufacturing country, but you still want to see it, right? And IV PMI is also going to be very important. Okay, so for me, Canada is down as weak. Let's have a look at CHF. I don't even know why we bother looking at this, but you always have to, right? Start off with last week. UBS economic expectations -3, so that's down. Economic barometer is positive. Next week, or this week, sorry, we've got retail sales year on year. We want to see that. Manufacturing PMI, we don't really care about that. You know, Switzerland is not a manufacturing country; it's a services country. They provide banking services. You know, everyone knows it's Switzerland's where you go for your banking. CHF, CPI, month on month. Let's check that. GDP quarter to quarter. Unemployment rate. Yeah. So we've got some news that we want to see. Again, for me, the Swiss franc is always a fairly strong currency, right? But there's no real massive news. For me, I guess you could put it anywhere in between strong to neutral. For me, I'm just going to put it in neutral. But just, you have to remember, if you're looking at CHF and you're pairing it up with a pair which is very weak, like Canadian dollar or Japanese yen, then it then kind of moves the Swiss franc from being neutral to strong at that point, right? Because you need the context of one being super weak and one being kind of neutral. Then it's far stronger than that. But if you were going to do like CHF AUD, then it would kind of be like, you know, you wouldn't really want to trade those two because they're just, AUD is strong and CHF is, you know, it's neutral to strong. So I wouldn't bother trading that. And let's see what we've got coming up next week. Nah, PPI, okay, nothing much. So I have listed CHF as neutral, right? But like I said, it can be strong depending on the pair that you're going to kind of cross it with, right? It's a little bit, it's not quite black and white, as we say. Let's see what we've got coming up next week. Sorry, last week. We had German IFO business climate, 86.6. Consumer climate, minus. German final GDP, minus. But it's stagnant. There's no change. Money supply, 2.3. It hasn't changed since before, but it is lower than forecasted. They thought it was going to be better. Private loans year on year is up slightly, so that's good. If there's more loans being given out, people are spending more money. German prelim CPI month on month. Spanish flash CPI year on year. Like I always say, we really care about Germany and France, right? They're the real big movers and shakers in the Eurozone. However, when we get like Spanish CPI and it's a year on year, or Italian CPI and it's a year on year, we do take that into consideration, right? Because it's a year on year, so it does have a bit of leeway. German prelim CPI month on month is down. Spanish CPI is down. Italian bonds down. French final private payrolls down. So it's not that good. I'd say Euro could. Let me just see the rest of it. German import prices minus. GDP down. German unemployment change. I mean, unemployment change is good. It was at 17k, now it's only 2k. That's good. I know it's less, so less unemployment is good, right? Italian monthly unemployment rate is down. Flash estimate year on year is down, but as expected, right? Core CPI flash estimate is down, but as expected. Eurozone for me, you can see that it's starting to decrease. It's still in that it's still, for me, strong at the moment. However, if we continue to get negative numbers, we will see it start to slip into the kind of neutral or even down to weak, right? But we do need to see more data first before we're gonna go to those extremes, right? Next week we've got loads of data that we want to see. We've got tons of PMIs, manufacturing, services, final. Yeah, next week is going to be a big week for the euro, so just be careful if you're trading euro pairs. Pretty much every day has euro news that we want to look at. All right, so bear that in mind. For me, just now, my opinion is that I'm gonna keep a euro at strong, because overall just now, if we see these numbers change, then we'll reevaluate it. But for now, euro is still strong. We really need to see these numbers and see what we get. Remember, when we're looking at like manufacturing PMI, services PMI, final PMI, blah, 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 anything above 50 is bullish, and anything below 50 means bearish, okay? If it goes from 55.3 and it's dropped to 51.2, that is not bearish, right? It's still bullish. It just means that things are slowing down, but it's still positive for the economy, okay? It's only when it drops below 50 that things then become bearish, okay? And likewise, if something is 42.1 and the next number we get is like 49.7, that is not bullish. Things are picking up, yes, but it's still below 50. Even if it's 49.7, it's still below 50, so it's not bullish. It has to get past that 50 mark, okay? Just bear that in mind. What are we on? Euro, yep, done that. So now, moving on, GBP. Let's go to last week. Okay, what do we have? Realized sales, minus 27. Nationwide HPI, minus 2, it's down. M4 money supply month on month is down. Mortgage approvals up. That's still positive. Net lending to individuals month on month is up. So yeah, still positive. The pound. The pound's just doing really fucking well right now. Next week we've got good numbers that we want to see. We want to see final manufacturing PMI, retail sales year on year. Yep. Final services PMI. Yep. We want to see all that. So for me, pound is still strong. GBP is strong. Okay. What we're doing now, Japanese yen. Let's have a look. Let's go to last week. You always start from the week before, right? So you can see what numbers you got. SPPI year on year, 2.8. BOG core CPI year on year, 1.8. Consumer confidence, Tokyo CPI year on year, 2.4, which is slightly up. Unemployment rate is up. Prelim industrial production is up, okay. Not as expected, but it's up. It was at previous -4, so that's okay. Retail sales year on year, down. Housing stats. The Japanese yen still fucked, guys. You're getting these little spots of this kind of fake strength, but don't be fooled into thinking, wow, it's now GG is now sells. We're definitely not there yet. Definitely not there yet at all. Next week for Japanese yen, we've got a lot of data that we want to see. Manufacturing PMI, capital spending, Average cash earnings year on year, we want to see that for sure. So again, for me, Japanese yen is weak. Definitely still weak. We need to see some solid data, and we just haven't seen it. And last but not least, USD. Core durable goods orders month on month. Down. Durable goods orders month on month is up. Composite HPI is down, but higher than expected. HPI month on month is down. Manufacturing index down. Consumer confidence up. Crude oil inventories is up. You can see they have a little bit more. They have more supply than they have demand because it went from -4, right? And it was they anticipated it to go to -2 million, and it went to 0.8. So yeah, they produced a lot more than people were buying. So there's more. That's where you get that pullback. When you look at oil and it's giving you this big pullback, that's where the pullbacks come from. There's a lot more supply than what there is demand, so it brings the price down. So when you see, oh god, oil's melting, that's why it's melting, because there's a lot more supply than there is demand, which brings the price down. Prelim GDP quarter on quarter is up. Unemployment claims are down. That's good. Prelim GDP price up. Wholesale inventories, pending home sales month on month -5. Okay, so that's not good, because that's a huge jump from 4.8 down to -5.5. FOMC members core PCE is sticky. Personal income month on month has increased. Personal spending has increased. These are all good. Chicago PMI is 46.1. Even though it's better, things are getting better. It's still bearish. So right, now that we're interpreting this data here, you can start to see these numbers coming through, showing you that the USD is kind of getting to that point where it's at its peak, and numbers are all coming down. You're starting to see far more negatives now, right? It's not even mixed data anymore. Mixed data is like one's good, one's bad, one's bad, one's good, one's good, one's bad. And it's like, okay, it's really icky peaky, 6 and 6, 10 and 10. You know what I mean? It's not like that anymore. We're getting a lot of numbers coming in, much less in the US. They're not dramatically less, but they are getting less, right? Which shows you things are slowing down. That's all it is. That's the kind of picture it paints for you. So what then we have to ask ourselves, so what does that also align with of what we anticipate and expect to happen in September? The whole world is now anticipating that the USD will have rate cuts in September, right? And this actually lines up perfectly with rate cuts potentially. Doesn't mean it's going to happen. We need to see what's going to happen, right? We need to see more numbers like that as it comes into September. But look, next week we've got a massive week. We've got, is it NFP? Yes, it is. It's NFP next week. Remember, it's always a spicy week, NFP. We've got ISM, we've got JOLTS, job openings. We need all this data, right? Unemployment claims, final services. So next week is a massive week for the USD, okay? It's not weak yet, but this week is going to determine what's going to be happening with the USD. And let me just check any rate cut time. Let me just have a quick look, lads. Okay, we need to see if these numbers all come in. More it comes in mostly weak next week. Then there's an even higher probability that we will have rate cuts in September in the USD. Okay. Now, when it comes to economies cutting rates, we automatically think, right, that means once they cut rates, it's going to melt. That doesn't always happen. It can happen, yes, but there's actually plenty of times, if you look back on the data, when there's been rate cuts and a currency has actually flew. And it's because they've already priced in ages ago that rate cut. So now it's already a good area of value. If you look, there's a rate cut and the market's at a great area of value to buy from, and you expect it to melt, and then you get the rate cut and then it flies, you're like, what? This is weird. Well, you have to look at the whole context, right? They've already priced it in. People have been saying since January this year, it's probably going to be September when the US cuts rates, right? So it's been anticipated for, months upon months. And so we have to take that into consideration as well, all right? Don't get caught out by thinking, oh, they've cut rates. Yeah, I'm going to sell the USD. It doesn't quite work that way. So next week, this week, sorry. Let's see what we've got coming up. We really need this data. When it comes to USD pairs, I'd be very cautious about trading anything. In fact, I'm not trading anything to do with the USD next week at all. I'm just going to wait and see these numbers come out. I'm going to let this week, see itself out in terms of USD. I will look at other pairs, but just talking about USD, and I'm not going to touch anything. So for me, just to wrap it up, it's pretty much the same as last week. Strong, I have Aussie dollar, euro, pound, and USD. Okay, weak NZD, Canadian dollar, Japanese yen, and neutral for me is CHF. All right. That, lads, is pretty much it. Let me just show you oil because it's really the only one I'm looking at. You know, there's nothing currency wise that I'm looking at. We will cover them, so just watch this. But let's have a look at oil. Look, oil has actually came back to where I first mentioned. Right, it's actually came back down to here. I did have this marked up previously. If you look, I just moved it because it was already moved from here, and I removed this. But yeah, that had triggered my. I put my bloody, what do you call it? Limit order here in case it came back down for the retest. I done that anticipating a possible retest on Monday and then go right, and it came down and it triggered it, guys. I closed it out. It was only $200 on like a 60 grand account. Do you know what I mean? It's peanuts. I think on mine it came to like, it was like $20 or something like that. Right? It was nothing. It's easy to make back. But the reason why I closed it out is because it was this is an unpredictable move, right? And when it comes to oil, we've seen a lot of stuff happening over the weekends, wars and this, that, the other, and you just don't know, how it's going to go. So it was unpredictable. I thought, look, just get out, minus $200. It's easy. It was like 0.2% of the account. It wasn't even 0.5%, and I would just prefer to enter it later on when it's like, okay, it's starting to show us that it's going in our favour, right? I mean, it could come down to here. Well, it already has, essentially. It could even come down to here. So I'm going to wait and see what it does. But again, oil is still my favourite, guys. If it wasn't for that bloody limit order that I actively closed, we literally don't have any losing trades on oil so far. It's fairly predictable. And it's just, when it comes back and hits those areas, the 786, it's fucking amazing, right? Let me just quickly fly through pairs and see if there's anything that I like. Let's have a look. Let me have a look on the weekly, sorry. I like to do it on the weekly. Okay, so I won't be touching this. I'm just going to fly through it and until I see one, okay? Like this one. This is one I've already showed. We definitely take this, but I'm not. I already said to you last week, remember, I'm not taking it when it retests here and goes. I'm ignoring all of this. And when I will take this trade is when it comes back and retests here. No, boom, boom, retest here, reject. Then I would take it, right? So we're a long, long way off, right? That could be about 3, 4, 5 weeks, whatever. So I ain't touching that. AUD Japanese yen is still buys all day long. It needs to come back down first. You look how slow it's been, right? It needs to come back down and retest. It doesn't have to be here, but it has to give us some kind of retest before I would even consider entering. AD USD wouldn't touch it. I would take a sell from up here. Yeah, I would take a sell from up here. I'd like to see that. But I mean, it could just go from here, right? Because here's a zone, blah, blah, blah. But you've got this messy range to the left-hand side. Not nice. If it does come back up and retest here, you've got it really nice and clean here, so it can then come back down and melt. All right, so potentially you could look at that. I'm going to make it red. Let me just see, is there anything that... Okay, that's miles off, so I'm going to turn that off. Nothing, but you can see, look, exactly where we marked up for the hedge. Look at that. It's came. This is just a liquidity grab, but we would have put our stop loss up here anyway. And it may have got stopped because that's quite a high liquidity grab. But you can see, look, when you mark these areas, lads, it just goes, right? Every freaking time. Look at that. I mean, I might get rid of like Euro pairs, as in like Euro USD, Euro GBP, because they're just shit. See, even when you enter them, right, they're just really shit. They don't move. I don't like them. Euro Japanese yen. Again, it's buys, but you need to see some movement, right? It hasn't really done anything in about 1, 2, 3 weeks. Hasn't moved. What else we got? Euro NZD, GBP AUD. Let's have a look. I'd like to see it come up deeper. I mean, it has touched here, and that could be it. But I would like to see it really come up deeper, actually, and really kind of hit this here and then reject. It could do this. Yeah. Boom, boom, boom. You know, it could do that. So let's just change that to red to avoid any confusion. This as well. There we go. I'm not touching that. I mean, that's wank. Look at the state of that, right? I'm not going to touch it. GBP CHF. The last one was CAD. Sorry, this one's CHF. That must be like the 4 hours marked up, but yeah, it's nothing there. GG definitely buys, but you'd need to wait for the pullback, right? I wouldn't enter it now. GBPNZD. Oh, that's actually, we were in this. That's the one Lee gave in the group. Look, and there it's coming back down to this level. You see that? Look, it's coming back down to this level. Fucking phenomenal. So you could potentially look to buy pound NZD when it reacts here, guys. So basically, pound NZD is really the only GBPNZD buys. It's the only one that we're really looking to buy. Obviously, oil. So far out of all these, GBPNZD is the only one that I'd be looking to buy. What's this? Pound USD. So I wouldn't be touching this next week. It's in an area of value to sell from, yes, but I wouldn't be touching it because next week's just a pure week, absolutely full to the brim of USD news. So I would not be touching any USD pairs next week. All right, not at all. It doesn't mean you can never trade when there's news, but when it's this week, like NFP week, and you've got all these major numbers, there's just no point because what you just get pulling down one. Oh, I'm in profit. Oh, I'm in drawdown. Oh, I'm in profit. Oh, I'm in draw, and it's just shit, right? Why do you want to put yourself in that psychological state, right? You want to keep yourself as calm and as relaxed as possible when you're trading. You don't want to be like the Chuckle Brothers, fucking to me, to you. What have we got here? NZD, USD. I mean, we can see here. Look, this is a big area of value to sell from. So you may get like really negative USD data once it gets here, and then it'll just melt. So you could. I'm going to remove this because it's obviously that's so old now. It's irrelevant. But yes, you could get your boom, boom, boom. Right, you're going to get your. That's if we see negative news from the USD. So you could potentially. You could potentially sell into the USD, but you're not going to be doing it this week coming, right? You're going to have to wait until next week and just get it out of the way. So you're probably going to be, you're probably going to miss this, which is a good thing, and you want to be entering, on when it comes back up retest, right? That's going to be your entry. You see what I'm saying? So I'm not even going to write it down as one to look at, because it's an NZ, it's a USD pair. I'm not going to touch it. NZD CAD, definitely, and I'll remove this only because it's past it now. Definitely in an area of value to sell from. So, I mean, you could put that in. Sells NZD CAD. NZD CHF. I've got to get rid of that. What was I looking at there? NZD CAD, NZD CHF. Nothing here that I would touch. And I'm not going to touch any of these. Well, I mean, look, I'll just show you them anyway, but I ain't touching them for the obvious reasons. That's in our area, but it's just not very nice, right? Especially this week. I just wouldn't touch it this week, lads. You might find that if USD news is good and it just pushes up, but don't think, oh, I knew I should have jumped in. No, when it comes to a week like this, don't think, fucking shoulda, woulda, coulda. Just wait and see. Look, so this is a fantastic area of value to buy from, right? If you wanted to enter a tiny small risk and just take the hit and you were happy to take a small risk, it could potentially be fairly profitable. But it's just something I don't do, guys. See, whenever I see all this shit for the USD, I just walk away. That's just my thing. You will find your own thing. And here's the only way that you're going to find out how you like to trade is actually by trying stuff. there's no point copying me or copying Lee as in, yeah, I would enter this, I wouldn't enter that. Sometimes you just have to look at the kind of charts and the setups and the information we're giving you, and then you kind of need to start deciding yourself, am I willing to take the risk on this? Because it's all about decision making, right? And if you want to take the risk on this, there's absolutely nothing wrong with it. It's the only way that you're going to learn, right? And just make your risk small, all right? If you have a losing trade, you have a losing trade. At least you tried it. You know what I'm saying? I just already know that I don't want to take it, especially because I have other people's funds, right? So I have to think about the whole big picture and not just myself. What is this oil? Let me clean this up a little bit. So what we may get on oil, right? It's already below here. We may get this. We may get a retest of this down here, which would be bloody fantastic, guys. If we get a retest here, we are definitely boom, boom, getting in about this, right? Definitely. So yeah, oil. Only three pairs I'm looking at for this week. It's buys pound NZD and oil, right? Sells NZD Canadian dollar. And I don't like that actually. So let me just explain this. NZD Canadian dollar, can you sell it? Yes, you can. Both of them are weak, right? Now, look at this. This has been ranging since the 19th of May, 2023. That's what happens when both currencies are weak. You just get a range. Now, can you trade it? Yes, you can. Why? Because look, it's clearly in a massive area of value to sell from when it's up here. And when it's down here, it's in an area of value to buy from, right? Again, you can decide whether you're going to take this or not. I'm not actually going to take this. Why? Because it's weak against weak, and that if I take that, it's then going against my rules. I only trade strong against weak, weak against strong, right? Um, so that goes against my rules. I ain't taking it. However, I always like to give this because if you want to take it, you can absolutely trade this. There's nothing wrong with you trading it. In terms of value, and value is very important, as we've seen over the weeks. Even trades that we haven't taken, but we've marked them up, and I've said, look, this is an area of value, blah blah blah. 9 times out of 10, it's been coming out right. When we go to the next week and we see it play out, we're like, holy shit, there you go. Prime example, when Lee gave the GBP NZD sell last week. Economically, fundamentally, you'd never sell that in a million fucking years. However, it was in a fantastic area of value to sell from, right? And we covered that the week before. So you can see how areas of value work. If you want to sell this, same as I just mentioned about the previous pair, you can enter a small risk. Stop loss is going to be above here. Enter a small risk, and just watch it play out. Okay, lads, that is pretty much it. If you are watching this from Facebook, you can have a look. Probably either the link is going to be above, or I may put the link to our Discord channel, to join us, sorry, down below in the comments section. If you're watching this from YouTube, go into the description, and I will have the link in there if you wish to join our Discord group. I'll show you it right now. We offer a full month completely free, so you can come on board and you can see if we're bullshitters or not. Here's a group here where lads have had an absolutely smashing week. Look, we have a segment here which is called Trade Results. Let's have a look. No, sorry, I'll bring it back. Here we go. Look, there's Jevons, nearly 200% return Jevons has had here. Here's his weekly profits, and he has a smaller account. See what else we've got. Jevons again, 3.33% for the day. Alex Ross, 4% gain in a day. This is them copying our trades. This is me for the month, 18,755. There's no losses on that. There's not a single loss on that. That doesn't always happen. Of course, I have losses. It's just been a good month, right? Haven't traded too much. You can see here, the only currency was NZD USD, and the rest of it was oil. We've been really, really good on oil. What else we got? We got Pats. This is my mate from the army. He's up $387. Copy it there. He's got a mixture on here. He's got my oil and he's got Lee's scalp. Fantastic. What else we got? Oh, that's me again. That was one of my days the other day. 6.7k on oil. Jevons again. Jevons again. We've got Big Brian. Big Brian's an oil worker, up 708 quid. So look, we give all the signals here. Every time we enter a trade, we do it. When I do trading for the swing trades, I do all my trading live in front of you, so you can see my screen, you can see my platform, you can physically watch me take the trade. You can ask me any questions you like why are we taking this? How did you know how to enter here? How did you know that this is your take profit? And blah blah blah. We cover everything on it live. All right. We've got the full forex trading videos for beginners, beginner videos, newbie videos, swing trade education videos, forex trading books. We've got trading psychology, fundamentals, which is essentially what you're watching just now. Okay, so come and join us. The link is below or above, depending on which social media platform you're looking from. And like I said, we charge £97 a month subscription. Follow our trades, copy our trades, learn at the same time with all the guys. It's a great community, but we also give you 1 month completely free, so you can come on board. You can try us, test us out, and see if you like it. If you don't like it and you're not getting any benefit from it at the end of the month, you just simply cancel and it hasn't cost you any money. If you want to stay with us, you stay with us and it's going to cost you £97 a month. All right, guys, let's have a great week on the charts. Don't over trade, don't over risk, and be very careful if you're trading USD pairs this week. I wouldn't recommend it. I just stay out of the market when it comes to things like that. But you do whatever works best for you. Let's have a great week. I'm Ryan Mack. This is The Trading Guys. See you next time.